Good morning, my sweet friend. How are you?
Good morning. Boy, it's been an exciting time. It's minute by minute, isn't it?
It sure has. So I wanted to chat with you a little bit today about some new trends that you're seeing. I think your industry is going to be crucial
Mhm.
in the times coming up. So I wanted to give you a little Zoom call and kind of talk about this. For people who don't know us, hopefully you do. I'm Lisa Wayman with Corner Escrow, and this is my sweet friend Tiffany Cross with Dedicated Credit Repair. And I wanted to just get some like frequently asked questions out of the way and post it up on the socials so people kind of get a better understanding of what's going on.
Sounds good.
So my first and foremost, most important question. So everyone is nervous about paying their mortgage, nervous about
Mhm.
paying their rent. And then of course there's consequences for that. Normally you get penalized.
Mhm.
So can you talk a little bit more about what that's going to look like on your credit if they decide not to do a mortgage payment or even pay your rent? Because I know not rent doesn't necessarily report, but it is still important to your credit. So what is going
Absolutely.
on there?
Yeah, so much is going on, and it's crazy. The last 2 weeks, everything seems to be kind of changing hour by hour. But essentially, I mean, as most people are aware, Bank of America and then many others basically came in agreement that they were going to extend various terms to clients who were going to be affected by the COVID-19 issues. So a couple things we're seeing. Of course, there are clients of mine that are calling very concerned. A spouse may be laid off, for example, or potentially laid off, and they're saying, what are the ramifications if I decide to take advantage of some of these programs? So
Yeah.
what we're seeing that many banks, of course, all the banks are basically saying it's a case-by-case scenario. So it's not okay to assume that what your neighbor is doing or what they've heard from their bank is going to be
Right.
applicable to you. So first and foremost, if that's even in the realm of possibilities that you may be taking advantage of these programs, it's imperative that consumers are getting on the phone today. They're going to have hold times anywhere from 2 to 3 hours to get these questions answered. And I just wanted to be real clear that most of these lending institutions are basically stating that there's two scenarios. For example, we're seeing that Bank of America is telling clients that if the loan that they're in is a program that is serviced by Bank of America, so in other words, they hold the loan and they service the loan, then they are willing to extend, in most cases, the opportunity to extend the 90 days of payments onto the back end of the loan. That
Sure.
is huge. That's a huge
Yeah.
deal. But if it's a program that is insured outside or excuse me, serviced outside of Bank of America or not owned by Bank of America, and perhaps they're servicing it but not owning it, then those programs, they're going to extend the 90 days on a case-by-case basis. However, it's going to be due in full at that 90-day period. So essentially, you
Oh,
may have 90 days worth of payments due effective immediately, not to
wow.
mention your current month's mortgage. So that's going to create a huge hardship for people that were under the impression that it automatically was going to scoot to the back end of the loan.
Right.
So the other thing is California Coast Credit Union, some of these other credit unions and banks are saying, don't worry, all loans, including car loans and things like that, are going to be extended and no payments necessary. But keep in mind, some of these banks are not saying and putting in writing that they're still going to put a 90-day late or a 60-day late on your credit report. And so consumers need to
Right.
be very cautious. This is not something to do to pad your savings account. This is only take advantage of this if it's something you absolutely have to do, and then just be ready
Sure.
for the fact that it could absolutely impact that FICO score.
So just because they're extending it or offering that program does not mean they're going to waive the fact that it hits your credit every month that you skip. Is that what you're saying?
Correct. Correct.
Okay.
And that's once again, that's on a case by case basis. There may be
Sure.
lenders that are willing to put that in writing. But again, if it's not in writing, and I would ask the consumer to say, where is your credit reporting policy in writing? Can I please have a copy of that so I can attach it to my credit profile if and when there is a misreporting? Because keep in mind, the right hand isn't going to be communicating with the left hand
The
as far
left,
as the
yeah.
FCRA and all the fair credit reporting laws that are there in place to protect consumers. We saw this back in 2010, 2011, and 12 when consumers were working on loan modification strategies with banks.
Yeah.
Some clients were making on-time payments, but they were making modified payment amounts on their mortgage that the lenders were agreeing to and putting in writing. But what they didn't tell the consumer is if you're making a partial payment unless you've refinanced your mortgage into different terms, you absolutely will have 30-day lates, even though those payments are being made on time in an agreed upon amount. So super important to be monitoring that credit right now.
Super important.
Yeah.
That's a great tip. So I know it's only been a couple of weeks since mayhem has broken loose,
Yeah.
but have you noticed a difference in like consumers' credit reports already or their spending habits on clients that you're working on?
Absolutely. It's crazy. We were seeing not only Facebook posts on our DCR, dedicated credit repair Facebook page, but emails coming in with people saying, talking about filing bankruptcy,
Right.
and our realistically, unless your hardship started in March, you're not going to be one of those that's going to be worked with. I mean, the banks aren't going to work with you if you were late in November and December and January, and now all of a sudden March is here, and you're using this as an opportunity to have a workaround on your loan. So that's number one. But we are seeing a lot of clients that are under the impression that they can be maybe late on their Macy's, or they're going to choose to be late on something that they deem to be insignificant. And then they're going to make on-time payments with their mortgage. And then they're questioning, that must be better for my credit. There is no differentiation between a 30-day late on a Sears. Is there even a Sears? Why did I say Sears? Macy's.
Let's go with Macy's. Nordstrom.
Okay. I don't even know if it's still in business.
I don't know. I think it's round one now, right? Round one.
Oh boy. But nonetheless, a 30-day late is a 30-day late in terms of the FICO score. Where the difference becomes important is when you're looking at mortgage approval through an underwriting guideline process. So mortgage underwriters are probably going to care a lot more that a consumer was late on a mortgage than Macy's. But in terms of the FICO score hit, it's still going to be a 60 to 80 point deduction, no matter what type of late it was. So we are seeing consumers, I would say, for every 30 people that are calling our office to put their program on hold because they're trying to keep their spending down, we have another 30 people that are calling saying, hey, I want to be opportunistic and I want to start purchasing a home when the time is right. So I think it's ebbing and flowing day to day. I know our phones definitely slowed down last week with people just uncertain. But at the end of the day, I think that the key here, and this is something that you and I have been conversing about quite a bit, is that this is going to be short-lived. It may have some longer term ramifications that we don't love.
Absolutely.
But at the end of the day, this too shall pass. And so we just need to keep clients laser focused with a tomorrow mindset that they need to be preparing for the inevitable, which is life is going to return back to normal. And when it does, we're going to thank ourselves tomorrow for making smart decisions today.
Yeah, that brought me to my next question. So there is some confusion or maybe uncertainty about people thinking that, oh, I'll just be late on a credit card and not on my mortgage because that's more important. So you're saying as far as your FICO score is concerned, there's no discrimination. You're late, you're late. It hits your credit regardless.
Absolutely. And what's unfair about that is if your FICO score was above a 740 before you were late, you may lose 130 points on your FICO score.
That might be nice.
I know. However, people that are, in the the 680 range, they're going to lose 60 to 80 points. So the consequence isn't the same for everyone. So we call it A paper. People that are 7-ish and up, you're going to see a huge hit on your FICO score for just one 30-day late, which is, in my world, pretty discriminatory. It kind of penalizes the A paper a little bit more. But nonetheless, if there is any recommendations on my end, my thought would be, of course, I'm going to promote us, but contact Dedicated Credit Repair. Let our team of experts who've been doing this for 15 years. This is not our first downturn, you guys. We've been doing this now through 2 huge market turns.
That's where you started, right? You started this business in the 2008 debacle, right?
Absolutely. Yeah. And so we've been able to sit down and say, okay, let's figure out how to stop the hemorrhaging. Let's help you stop the bleeding, and start figuring out the best way to mitigate through some of these landmines, because there is no one size fits all answer. Each family, each, marriage has different circumstances, and every credit report has very different solutions. So, this is the difference between hiring an expert and trying to do it yourself. So absolutely, now's the time to be looking proactively at these scenarios.
We do not recommend DIY credit repair.
Oh gosh, no.
Do you have a few tips that you can give our listeners and consumers to help just keep their credit
Yeah.
where it is, maybe, or?
Sure. Yeah. So, couple things right now. First of all, if you're a small business owner, this is the time to be looking into small business loans. The interest rates are phenomenal. They are working with you. So if there is a debt issue in your family, let's just say that you have just a ton of credit card debt right now, and you happen to be a small business owner, maybe in the past you've applied for business lines of credit and were denied. Now is the time to relook at that. I know the government is really promoting a lot of programs in favor pro small businesses. So this is the time to take a look at some of those 0% interest rate loans and look at possibly paying off some consumer debt. Of course, you want to talk to banks and make sure that that's going to be doable, but that's my first and foremost. The other thing is, if you have not missed any any payments right now, there is absolutely no reason why you shouldn't be contacting some of your credit card companies and asking for credit limit increases.
Yeah.
The key is to keep those utilization ratios at 25 to 35% of the available credit limit. You will find that you're organically going to start seeing that score just pop up pretty substantially by using your credit limits to your advantage. So definitely be asking for credit limit increases. The other thing that I wanted to caution people on is, similar to 2010, sometimes when we hit, rough patches or times of uncertainty, you may have some extra cash in the bank, and you may be saying, hey, honey, let's pay off these credit cards so that we can feel comfortable and we don't have any debt. Now that is something that I always tell people, that's wonderful from a financially sound situation. But from a FICO driven decision, I don't really think now is the time to be paying cards to zero. In the past, if history repeats itself, we're going to start seeing that credit card companies, if they see an aggressive payoff strategy or people just kind of starting to pay down credit cards pretty aggressively, what typically happens in this type of market is that credit card companies start saying, thank you for your payment. Now we've decreased your available credit limit to the amount that you
interesting.
owe. Yeah. And so that'll, of course, make your credit card look maxed out, even though you did something wonderful, which is pay it down. Or pay it. So just pay it down gradually, keep some money in the bank. Again, the ideal scenario is 25 to 35% on any one card. A lot of times people think that means, if all of my cards combined are at 25 to 35% usage, that's the same, and it's not. You want to do that on every single credit line.
Individual.
Yeah.
Have you noticed a difference in the way the collection companies are responding right now, or are they giving you any new information on the way they're responding?
Yes. So if there is a silver lining in all of this, it's that very fact. So collection companies are the last man on the totem pole. They're at the very bottom of the totem pole in priorities. Very few people want to take their savings and pay off an old collection debt just in good times. When the economy takes a hit, collection companies tend to be a little bit more eager to wheel and deal with you. There's a huge amount of strategy that is required in paying off collections. Keep in mind, when you pay off an open collection, you are reactivating the DLA on the credit report. So the DLA is the date of last activity. So you may have a collection account that's 4 years old that is no longer affecting the score in the same manner. It's still affecting the score, but certainly not as much as if it were a year old. When you bring it current or pay it off and it doesn't get deleted, you have reactivated the date of last activity on that credit profile, which will drop the score, again, approximately 60 points. So the key is to contact companies, negotiate settlements. Right now, we're seeing 25 to 50 cents on the dollar is a pretty standard settlement offer. The higher the amount that you pay, the more likely for them to agree to delete it off the credit report. So in our world, it's called a pay for deletion. Those are normally about a 40% chance of a collection company agreeing to do that. But in this current situation, we're seeing that that's pretty common, that collection companies are agreeing to that again. So
now would you advise, if they're not enrolled in your company, would you advise a consumer to contact the collection company directly or enroll in a program like yours? I mean, of course you want them to enroll in a program like yours, but if they're
Right.
someone who's already DIYing, is there
Yeah.
a
So if
danger
you
maybe
do,
to reach out to them ourselves, our consumer selves?
so, unfortunately, there's a lot of DIYs out there that then their lenders like, wait, this is completely screwed up now. You've
Yeah,
reactivated the date of last activity. It's now
right.
reporting twice. The new collection company, because you made payment, is now reporting the same collection under a different name and account number. So, of course, I'm going to say DIY. This is not the time to be turbo taxing your taxes. This is not the time to be for selling by owner your
Mhm.
home. And this is not the time to be, deciding to go on Credit Karma and disputing stuff online. This is just literally the worst time to do that. In terms of settling collections, obviously we want to be a resource for everybody. But there is no shame in your game. If you decide, hey, listen, I have all the time in the world right now to do the research and frankly want to save money and start settling my collections. At this point in the game, I would say, give me a call anyways. Let me at least give you some advice and some coaching based on 15 years of experience that you can take and run with. We can always come in after the fact and start disputing collections for deletion if that's something that is necessary. But I would hate to see people going rogue right now and trying to figure out something that can truly be a huge pitfall down the road when you go to refinance and purchase if it's done
For sure.
incorrectly. Yeah.
If somebody is trying to just monitor their credit, maybe they have a great credit score and they just want to keep an eye on it, what are your recommendations to do that?
Okay, so the old saying, "You get what you pay for," is
Yeah.
true. Credit Karma is the worst thing that ever happened to credit repair. It is free, but it only provides a consumer with 2 credit bureaus.
Right.
It also is not on time. It does not reflect immediate changes. The scores are extremely off. They're not accurate at all. They use a Vantage score rather than a FICO score. And what consumers need to be real clear on is that in this current state of the union, we need to be monitoring accurate information. So of course, I'm going to recommend myfico.com. That's FICO, myfico. That website will give you month-to-month credit monitoring. It also will give you your true FICO scores. There's an auto FICO, a mortgage FICO, bank card FICOs, installment FICOs, you name it. There's like 9 of them.
Wow.
And it's imperative that a consumer be really watching that. We're also seeing a huge influx in consumers being preyed upon by icky people that are sending text messages and emails saying, hey, listen, I'm your Chase representative, or I'm your, I got one over the weekend, Verizon Wireless, or I got one from someone from Costco saying that I had a Costco membership. And if I click this button, people are accessing your information. They're stealing your identity, and they're getting all kinds of pertinent information and preying on people that are just in a very vulnerable state right now. So now more than ever, if you can, Identity Guard, LifeLock, myfico.com, those are really good ones to be investing in.
Awesome. And we will put those websites, and I will definitely include Tiffany's information in the comments below when I post the video, so you guys will have access to that. So anything else, Tiffany? Any other tips, tricks, quick little advice before we sign off here for our consumers?
Yeah, at the end of the day, like I started out saying, and Lisa, you're good at being the biggest cheerleader out there for real estate referral partners in particular. This is a time for all of us to come together, arm in arm, and provide resources, whatever our respective industries are, to provide resources and great information and to calm the environment. Because again, people are, the sky is falling. It's only temporary. This is not the same as 2008. We don't have the same concerns. So just buckle down. Take your safety first and foremost, put your family first, but just know that there are huge resources out there. I know you, Lisa, are a huge proponent. You're amazing with your clients. And I'll tell you, I feel like this area, Temecula, Murrieta, and surrounding areas, we are so blessed to have so many ethical companies who truly care about your clients and you, the consumer. So, this too shall pass. Stay tomorrow focused. And just know that there's resources available to you.
Awesome advice. Stay tomorrow focused. Don't panic. All right. Well, thanks so much, Tiffany. I appreciate you coming on with me this morning. I will,
Thank you for
again, like
having
I
me.
said, post the video and all of the websites she's suggested in the comments below. And if you guys have any questions, please feel free to reach out to us. I'll see you later, Tiff. Thank you.
Bye. Thanks.
Bye.